So we have 10:21. We got the crude oil inventory numbers coming out at 10:30 a.m. Eastern Time. We're going to jump into commodity spreads, crude oil, and let's start things off with the 11 a.m.s, all right? We have crude right now trading at 66.16, and for the 11 a.m.s, we're going to have, looks like either 65.75 would be a point that we could use for our bullish and bearish spreads, so it would be about 35 cents away. And then what's intriguing here is that we're going to have 65.50, which is, again, going to be 35 cents. So the indicative, as in crude oil, is trading right at kind of the middle. And before we jump around, I'm just going to see if these line up. So I tell you what, I'm going to jump right to the 12 o'clocks because we like to have the spreads where the floor and the ceiling
closest
ideally line up to where the price is trading at, so we're not we don't have to pay for that intrinsic value.
Right.
Whereas in the 11 a.m.s, we have about 35 cents of intrinsic value that one contract or the other, depending bullish or bearish, is going to have. So 66.25 is a point we can use. This is going to be our bullish spread with $1.50 up to 67.75. I'm almost getting lost on these numbers. 67, 68. We haven't been up here in a while. And then 66.25, here's your bearish spread, trading down to 64.75. $1.50 in each direction. And you're going to have 11 cents of intrinsic value in the bearish spread, right? We're 11 cents under 66.25, so we have 11 cents of intrinsic value in the bearish spread. We're going to have no intrinsic value in the bullish spread because we're about 11, 12 cents out of the money. Well, I'll call it 13, 12 cents. So if we're buying the bullish spread, this is the noon. That one's going to be about $27. Would be selling the bearish spread. It's going to be about 38.
We get some.
That's an expensive trade.
Yeah.
You know, if we're familiar with these, as we are, we look at them, and I'm not sure if this bid-offer spread is a little bit bigger than maybe it is, 7 ticks. Let's jump around, okay? So that one.
I think it has to do with the bullish spread. It's like we're only trading 66.14, but yet we're buying at 66.52.
Well, to put things in context, so here's both spreads are priced similarly in that the only difference is that this spread has $11 of intrinsic value, which is identical to the premium. So that's where you just want to get used to where you know. So and that's where we talked about why I jumped right to the noons, because when you're the 11 o'clocks, we would have 35 cents of intrinsic value on one side with premium added on top. No, that would have been expensive.
Yeah.
But I mean, you know, oil's been rocking and rolling, okay?
Yeah.
There's premium. I mean, you know, we've just went from, what have the last 4 days been in oil? My goodness, right?
And what's happening here, I suspect that they're putting a little bit into it, because you're right, you're testing these highs of the last 3 months. So, if this thing flies, man, this thing can really fly.
Yeah.
And, of course, it's all about missiles, too, in the Middle East. So that's in there too.
Ratcheting up for sure.
Right.
And I'm just jumping around. So here's interesting. Let's take a look at the full daily spreads. Okay. So now these expire at 2:30, and they're also $5 spreads. So the last ones we're looking at were $1.50.
Yes.
So there's going to be a little bit of premium potentially in here for the extra price action you have.
Yep.
And then there's definitely going to be premium in here for the time action, because you have 2.5 extra hours as opposed to having an hour and a half. You have 2.5 extra hours. Now, a lot of the time premium is going to be waiting for these numbers that come out at 10:30, but still, that's a lot of time with how far oil has been moving. So 66, this time up to 71, right?
Yeah.
That's going to be your bullish spread. And this time, we're going to have intrinsic value to, see, and this is where it had to do with the bid-offer spread, okay? So tight bid-offer spread here, right? 1 tick, 2 tick. The other spread we're looking at had like 7 ticks, and that's where
it was also 66.57 instead of 66.40.
But 66.25 was the point.
Oh, cool.
So that was a big. Okay. So we're dealing with different price points. So that's why.
Yep, I got it.
So this would be costing you 40, and then and then from 66 down. So again, this is our bullish spread going from 66 to 71. This is the one with a little intrinsic value. This is going to be your bearish spread. So you can see this is costing us 67. Not much more than the one that we were lining up, but a little bit different in that you have intrinsic value to the bullish side on the spread.
Yeah.
So you have a kind of a head start to the bullish side. That last trade had a bearish intrinsic value, about 11 pennies. But still, so you'd be looking at $67, which represents 67 cents away from $66, lots of 66s in here, would become your break even. And what's nice is you have till 2:30.
That's a big dumbbell.
And if you ever got $3-4 in movement. I mean, things could happen. Missiles could fly today. Who knows?
For sure.
Let alone if without missiles. I mean, the type of price action we've been getting. You know, just taking a look at the chart as we come into the break. Big action, you know, and this is just talk about pulling it back. We were just at $63 on Monday. Yeah, so we got 3 minutes. We'll be back with those news. And
stay right there, folks. Tommy and I are coming right back. Welcome back, folks. Okay, let's see what we got here. Crude inventories rose 3.31 million barrels.
That's the headline number. Let's jump over and see how the market is reacting. So we'll pull up the chart, and it looks like it's declining a bit. I see 65.81. Let's zoom in to see some context there. So we're trading about 66.11 coming into those numbers. Right. So we're down about
that was quick.
35 cents.
Yeah.
And again, you can see the time right here. We're looking at 10:30 and 53 seconds. So we're only within a minute of this news breaking. And like you said, we had a decline, right? Was it a decline? I'm sorry. Let's jump back. What was... No, they rose. 3.31 million barrels. Much bigger crude build than expected, and an expected draw in distillates as well. So your gas inventory is rising 458,000 barrels, but I wonder, we'll pull up because expectations are everything. Like to scan down here and see. So it looks like that wasn't quite the expectation they were looking for, but nonetheless, the market is reacting. And look at that, right? Quite a pop as well. So the trade we kind of focused in on towards the end of that segment, right, was the one that was the 2:30 trade with a potential $5 in action.
Yeah.
And you have till 2:30, and that was going to cost us about $67 for both legs of that. So you'd need 67 pennies away from $66 to become your break even.
Right.
So either 66, 67 or 65.33, somewhere in that range becomes your break even. You have value anywhere away from 66. And like we always talk about, if you get a spike in one way, you can always close out one leg of this trade.
Yes.
The other leg of this trade remains active until, of course, 2:30. So we'll check back in. Not too much of a dramatic move currently.
And this is a really good day for the aspect of the 2:30 close because there's so many moving parts, you know, between Syria, between Paul Ryan, just between the market in general.
Sure.
Right? You know.
Just in general, I think the oil market's been rocking, man. Every time we do this on Wednesday for about the last month, we've gotten some good action. There's been some good videos just because you got good action, and we've almost gotten good action in both directions.
Yes.
With a spike lower followed by an acceleration to the high side, or a spike higher with a pullback later in the afternoon. So we'll see. We'll see. Right around $66, $65.90 currently. We'll check back in.
Let's go over and, you know, what we had out here this morning is that we got...
you know what? I was just going to say that because they had the estimate in there before we jump away, that it was a rise of 3.3, and I believe that the estimate was a decline. Yeah, so just as we wrap that up, the estimate was a decline of 1.2 million barrels.
Wow.
Yeah, and
that's a big number then.
And there was a rise of
3.3.
3.3, yeah. So that market should react. It's sitting there, but we'll see what happens. So go for it.
Welcome back, folks. And we're talking Wednesdays. We're talking spreads, volatility spreads in the Nadex platform. And look at this oil contract.
You don't have to wait long to get a good update on the crude market right now. So currently trading 67.13. We were as high as 67.42. We have the bullish spread we were looking at here. You'd have $116 of value at this price because anything over $66, we're about $1.16 over that price. The two legs of the trade were going to cost us about $67 if we had made it. Quite a run, quite a level in oil. We're over kind of the highs that we've been at in any recent mode. So some good action. We'll see where the day leads us.
And have until 2:30.
Yes, that's and this contract's open. You could close it out, take your profit if you wanted to, remain this one active. It would be hard-pressed for this to start trading below 66, right? But anything's possible in this market.
Well, and you know what's cool about something like this? You know, we're talking one contract, but you have a couple contracts. You could always take one contract off. You leave one contract on.
If you're trading a few, we always look at one contract per. But yeah, definitely.
Pretty amazing.
Definitely.